Good morning everyone. This is Rohit from Fundamental Desk, Axis Securities. We'll talk about the market outlook, later an update on the Indian banking sector and a result update on GMM Fondler. FMCG company Hindustan Unilever posted better than expected results in Q4 FY17 as impact of demonetization faded away. The revenues grew 6.3% to 8969 crores and net profit grew 6.2% to Rs 1183 crores. Asian markets are trading lower despite strong data from Japan as political turmoil in US continued to weigh on investor sentiments. On the GDP front, Japan's GDP grew 2.2% in January to March quarter, better than forecast of 1.7%. Nikkei is trading lower by 1.68%, while Hang Seng was trading lower by 0.37%. SGF Nifty is trading lower by 0.58%. The US markets ended sharply lower amid concerns that political turmoil would hinder implementation of tax cuts and other pro-business policies. The Dow Jones lost 373 points or 1.78% to close at 2607, while Nasdaq lost 159 points or 2.57% to close at 6011. Results to watch out for today: Aditya Birla Nuvo, Bajaj Auto, Coffee Day Enterprises, EID Perry, United Bank of India. Cabinet approved new coal linkage policy. UK unemployment rate at 42-year low of 4.6%. On the corporate front, JSW Steel has drawn up capital expenditure program of 26,800 crore for the next 3 years period to expand capacity. Dabur signs pact to buy 2 South African companies for a consideration of approximately 24.4 crores. PVR Group firm Elan will invest about 550 crores to develop a mixed-use project in Gurugram. Jindal Ploy Films plans to raise up to Rs 800 crore by issuing equity shares or securities to fund this business expansion. Now talking about an update on the banking sector. Government has empowered RBI to tackle stressed assets. So, Government of India has passed an ordinance enabling RBI to issue directives to banks to refer specific NPA cases to the recently set up Insolvency and Bankruptcy Code. Currently, RBI has powers to only direct banks to recognize an exposure as gross NPA, force them to make provisions as was seen in the recent case of Punjab State Food Corporation and a large cement exposure. With this ordinance, RBI is now empowered to force banks to take business decisions, namely forcing them to refer cases to the insolvency machinery as well. Our take is the new powers are a welcome step. It gives RBI the authority to break the deadlock and direct banks to initiate insolvency proceedings against NPA accounts. The oversight committee, to which large stressed accounts would be referred, will advise banks and take the politically difficult haircut or the valuation decisions. Liquidation of underlying assets, particularly in steel, cement and power, could involve takeover by cash-rich PSUs. However, haircuts may be larger and smaller PSU banks do not seem to have the capital required to take such losses. Government of India has remained wary of wanton equity infusion into weak PSU banks, demanding firm turnaround plans before opening up its purse, sale of non-core assets, reduction of non-staff overheads, closure of unprofitable branches. Reading this together with the revised PCA norm by RBI last month seems to suggest the ordinance would further the cause of consolidation of weaker PSU banks. Thus, our key beneficiaries from a coverage universe are Canara Bank, SBI, PNB and ICICI Bank. Talking about a result update on GMM Fondler, its revenues grew by 34% and PAT grew by 90% because of very good performance by both the segments, that is glass-lined equipment as well as non-glass-lined equipment. Due to healthy order book, strong brand name, it deserves premium valuation and we maintain a buy rating with a target price of 662, which is 12% upside from the current price. So this is from my end. Thank you.